collaborated with our Singapore and Hong Kong offices on doing a webinar for doing business in the UAE. And the focus is very much with Singapore and Hong Kong clients in mind. So we have included in the presentation some case study examples for you all. Just so that you guys are all aware, the session is being recorded, and as we experience the muting and unmuting malfunctions that we just had to deal with. If anybody has any questions, if you could please pop them into the Q&A section at the top next to the chat function, and we will do our best to get to as many of the questions that you guys have as possible. If we don't happen to reach your question today, we will reach out to you personally and kind of engage with you in a conversation about your specific requirements or questions. Miguel, if you wouldn't mind going over to the next slide, I just want to intro our speakers. So speaking to you today will be our commercial director, James Swallow, and our business development manager, Martin Zubeldia. So Martin, over to you. You're on mute, Martin.
Yeah, sorry. Thank you very much, Bianca, and thank you all for joining today. I will have the pleasure to share with you some insights related to UAE and our services. So basically, maybe we can change the slide. All right. So located in the Middle East, the United Arab Emirates consist of 7 emirates, namely Abu Dhabi, which is the capital, Dubai, Ashman, Ras Al Khaimah, Fujairah, Al Quwain, and Sharjah. The country covers almost 84,000 square kilometers in total. It's governed as a constitutional monarchy, and the UAE has a population of 9.9 million, with expatriates making up to 90%, and UAE nationals only constituting 10%. And 99% of this population resides in urban areas. Now, 2 years ago, the per capita income stood at $78,255, placing it as the 6th highest globally. Projections for 2026 are even more optimistic, with estimates surpassing $100,000 per capita. The UAE is now the 2nd largest economy in the GCC, only behind Saudi Arabia. Another facts of UAE. Can we please change the slide? Thank you. So more than 60% of the population is under the age of 25. The UAE stands also as a global hub, welcoming 12 million visitors annually through one of the busiest airports in the world. If I'm not mistaken, Dubai Airport is the 6th or the 7th busiest airport every year. The nation built record-breaking attractions such as the tallest building, the largest mall, the highest pool, the highest skyscraper. Whenever you hear largest, biggest, most expensive, most probably it's from UAE. Another fact from UAE is that it's the world's 3rd largest oil producer, trailing only behind Saudi Arabia and Russia. Now, the interesting fact is that in 1971, when the country was established, the oil sector share in the GDP was 90%. Now, 40 years passed, and thanks to this economic diversification adopted by the country, the contribution was decreased. Currently, non-oil sectors account for 70% of the total GDP. Now, many now move to UAE because one of the reasons maybe Abu Dhabi and Dubai are every year amongst the top 10 safest cities in the world. It's also very easy to migrate or to register new companies. And this is not a slogan for marketing, but actually everyone is welcome here. In this country, almost 90% of the population are foreigners, and only 10% are local Emiratis. So if you look how the country develops, most probably the number of locals compared to foreigners will decrease even further, as UAE keeps attracting more and more foreign investors. Now, the UAE is not only economically robust, but also politically stable. If you compare with countries in the region, there are no civil wars or any existing conflict in the country right now. One of the hallmarks of the UAE is how it adapts to embracing change. This is evident in the smart government systems, in the country pushing both cities, Abu Dhabi and Dubai, to become a hub for new sectors such as fintech, artificial intelligence, cryptocurrency, blockchain, security technology. Another move that aligns the country with global practices is that it's the only country in the region that transitioned from a Sunday to Thursday work week to a Monday to Friday work week in 2022. So this is a commitment to international standards. Another magnet for international investors is obviously the low corporate tax, sitting at 9% right now. It's also very interesting to know that UAE has more than 90 double tax treaties, including China and Singapore. And perhaps one of the most compelling aspects for many, including myself, is that there is no income tax. Can we change the slide, please? Yes, thank you so much. Now, sovereign and PPG covers now 26 jurisdictions around the globe. Only in UAE, we have 4 offices. We have 2 in Abu Dhabi, we have 2 in Dubai. There is almost 70 staff based across these 4 offices, and we are now the second largest office in the group, providing back office support not only to UAE, but other offices across the Middle East. Now we'll start talking more about the services we can offer. All right, so every company in the UAE requires the services of government liaison officer, otherwise known as public relations officers or simply PRO. PRO services basically refer to all activities related to processing governmental documents and paperwork. Now, processing government documents can be a complex task for many, particularly for foreign investors who are unfamiliar with the region. Now, we have direct access to government departments and ministries, and we have also on-the-ground experts in each department, so our team can streamline business setup and provide all the ongoing support and administration that a company setup requires. The most common requirements for PRO services in UAE include processing visas and company formation. So let's start with the visas. There are several ways to obtain residency in the UAE. For example, the most common is the employment, like my case, or family visas, both with a duration of 2 years. Another option is residency through investment, with the possibility of securing golden visas lasting between 5 to 10 years through different routes. There are green visas spanning 5 years. This is for skilled employees and freelancers. For those age 55 or older, there are retirement visas. This is also valid for 5 years. There are also work remote visas valid for 1 year. And for specific work or project purposes, there are mission and project visas lasting 3 months. Another PRO services is that for those residents that spend at least 180 days in the UAE, we can assist to obtain a tax residency certification. Now, the second biggest component of the services is the company formation. Can we please change the slide? Thank you. Now, there are several methods by which a foreign investor can set up their business in the UAE and GCC. These company types are quite similar across the region, across the GCC, but with subtle distinctions and local regulations specific to each entity. Now, with our experience and expertise, we will assist you in identifying the most suitable option for your company. So there are different types of entities such as LLCs, branch offices, trade representative offices, professional service license, free zone entities, SPVs, foundations, family offices, offshore companies, which are LTDs, and freelance options. And of course, if the activity requires an approval because it's a regulated activity, we can assist to obtain these regulatory approvals. For example, for ADNOC, for anything related to oil, VARA, which is the government entity regulating virtual assets, from Dubai Municipality, from Civil Defense, Civil Aviation, Ministry of Health, and many more. I would like to pass you now to Jim, who's going to explain with more details the main setups in UAE. Thank you.
Thanks, Martin. So I'll just cover the three main areas Martin touched on there: mainland, free zones, and offshore jurisdictions in the UAE. The three main options of why companies would go for each one. So just addressing the mainland area, that's obviously within the UAE, in the onshore jurisdiction. Licensing is dealt with by the Department of Economic Development. And those companies, those areas are really designed for companies that are doing business within the UAE. So industrial, commercial, trading, professional activities, tourism. Mainland companies have access to all areas. They can import and export and access all activity ranges within the UAE. The mainland setup is required if companies are looking to fulfill, obviously, UAE government tenders. Martin talked about oil and gas. ADNOC, Abu Dhabi National Oil Company, based down in Abu Dhabi. A company would have to set up in mainland Abu Dhabi to be able to access oil and gas tenders. And that also includes power generation, critical infrastructure, refineries, any industrial areas as well. So companies need to consider the location in relation to whereabouts in the mainland when they're setting up. Mainland companies have access to office space anywhere. So generally speaking, there's much more affordability for a location. 100% ownership is now allowed. A couple of years ago, commercial companies law changed in the UAE. You no longer need a local partner. Most activities are available to 100% foreign ownership. There's no visa restrictions in the mainland. You can get all the range of visas that Martin talked about there. Family visas, investor visas, work visas, as well as short-term project visas or mission visas. They're also available in mainland. And mainland companies, you obtain an onshore or mainland labour contract, which allows you to effectively work anywhere within the UAE. The considerations for mainland is that corporate tax has come in June this year, and that's now starting to kick in at this year end. So companies that are doing business in mainland UAE are subject to corporation tax, obviously tax on profit at a rate of 9%, and companies will need to register and submit their corporate tax returns. WPS and payroll. WPS is the wage protection system, and something in the mainland UAE that was implemented a while ago is that all companies need to pay their staff through a central clearing system with the central bank linked to the individual's labour file and the company's labour file, ensuring that workers are paid the amount that's on their work contract, and that's cleared through the central bank system through the wage protection system, or WPS. That needs to be done every month, and that's a process that companies need to think about when they're setting up in the mainland. There is a substance requirement, so companies need to have a general manager on the license. That general manager needs to have a resident visa, Emirates ID, in order to prove substance and to operate the company, set up a bank account, etc. And recently, last year, they brought in Emiratization requirements, and that's a requirement to hire a certain ratio of local Emiratis. The ratio is very high, so it's 1 in 50 at the moment, so it's still very or low, depending on your perspective. So it's fairly, it's mainly for certain sectors and companies with larger numbers of staff. The free zone areas, there are 50 plus free zones across the UAE. Variety of jurisdictions and sectors. There are a number of designated free zones, which are the traditional free zones. So the fenced port area, the two port areas, Abu Dhabi, Dubai, also the airports for logistics purposes, but there are also sector specific free zones. Healthcare, there's commodities, there's financial free zones. I'll come on to those in a second. But those free zones have traditionally been used either for logistics purposes or the purposes of bringing goods in and services in, but without touching the UAE, but also to get around the issue of local ownership that was required a number of years ago. So 100% ownership is allowed in the free zones, but now it's also allowed in the mainland. So free zones are becoming less attractive if you're looking for that, that component. The main differentiator is that companies in the free zone, strictly speaking, are not supposed to do business in mainland UAE. But a lot of companies that deliver services virtually, for example, consultancy online, using online platforms, all those services can be delivered in the free zones, will do business in the UAE. And the way it's been handled now is that the mainland or free zone revenue will be delineated. And you will incur, free zone companies will incur corporate tax at 9% if they're doing business in mainland UAE. If they're not doing business in mainland UAE, only in the free zone or internationally, then they can obtain a 0% corporate tax rate. So companies need to think about what they're doing, what their location is, and the tax position if they're looking at free zones as well. Office space for free zones is much lower cost. So they allow a flexi desk for 2 or 3 staff members, for example. So initial setup is lower cost. However, if the company takes on more staff, the free zones are limited in their area. So you have to rent an office in that free zone. And the ratio of number of staff, each staff member must have at least 10 square meters office space. So the free zone will make you rent larger and larger office space. And generally speaking, the office space is more expensive in the free zones because it's restricted. There are restrictions on trading in the mainland, but you can get around those, particularly if you're delivering services. But again, it's that corporate tax will then kick in at 9%. You won't be able to bid and undertake government work, generally speaking. You won't qualify from a free zone. You'll have to branch from the free zone into the mainland, or indeed come straight into the mainland to set up if you're looking for government services, government contracts, and that kind of thing. And the other thing to mention is that the visas themselves that staff are issued are free zone visas. They don't have onshore labour files, and short-term project visas are not available in the free zones. The third option is offshore. So that's one removed from the free zone. It's not strictly in the UAE, it's offshore. There are a couple of offshore jurisdictions, Ras Al Khaimah, Jafsa, and also in ADGM. It doesn't allow you to get a resident visa. You can't put staff on the ground. You can't undertake work in the UAE, but they are very useful for holding company structures and companies that operate internationally and not in the UAE. Very quick to set up. They are private registers. It's useful for asset protection, 0% corporate tax. As I said, you can't obtain residency. You can't deliver services into the UAE, but often they're used for the holding company structures or to keep the assets away from the UAE civil law jurisdiction into a common law jurisdiction in offshore. There are banking issues with offshore companies because you need to prove substance when you're setting up in the UAE. Often those offshore companies will choose an international IBAN or electronic banking that may be outside the UAE. To set up a UAE local bank account with an offshore company, you will probably need an operational company that's either in the free zone or in the mainland associated with the offshore company to prove substance to get the bank account open. So that's a consideration for those companies looking in offshore. Next slide, please, Miguel. Thanks. So just drilling a little bit closer into some of those jurisdictions, I'll touch on some examples. Offshore, I talked about Iraq. Ras Al Khaimah is one of the Emirates. They have an international corporate center, which is their offshore jurisdiction. Entity types, special purpose vehicles, foundations, holding companies, family office, as well as operational limited liability companies, branches, establishments, etc., or the full range. It's a common law jurisdiction using ADGM and UK courts. International arbitration is possible, much more business-friendly environment, 0% corporate tax. Trading is possible. Trading activities, consultancy activities are possible, but not in the UAE. You can trade outside internationally. 100% ownership, very much used for asset structuring. Bank account, as we talked about, can be problematic there if you're looking for a local bank account. The 2 free zone areas, I've separated them into the financial free zones, and there are 2 financial free zones, DIFC, Dubai International Financial Centre, and ADGM. Those are the primary free zones in the UAE. Both common law jurisdictions have UK courts in there. They are financially regulated environments. There's the DFSA, which is in DIFC, and then FRSA, which is in ADGM. They have their own regulators, and they have a number of regulated activities for all the way from category 1 banking through to brokerage, cat 3, cat 4, as well as VARA activities, so virtual asset regulatory authority activities in there, particularly ADGM. Many of you will have seen the news, Binance recently. The previous head of regulation at ADGM is now the CEO of Binance. Binance have a an exchange license in ADGM, and the UAE is very much promoting those type of activities. 100% ownership. Activities, you can have a full range of activity. The limitation on dealing with the mainland is still there, so no trading or import, but virtual services can be delivered. And the corporate tax level is obviously important in relation to whether you're doing business in the mainland. The DIFC and ADGM companies will need to be audited annually. There's an economic substance report that needs to be done every year in line with other jurisdictions as well. So companies will need to think about their compliance, particularly if you're going into the financial free zones. Then I've sectioned off into the standard free zones, which there are 50 plus, as I said, and I've picked out DMCC, Dubai Multi-Commodity Centre, and DWTC, Dubai World Trade Centre, both prominent central Dubai free zones. Again, full range of entity types, LLCs, branches, rep offices. It's not a regulated environment, although there is VARA regulation in DMCC, and we see some certainly virtual asset service providers in there. But it's the same as every other free zone. So 100% foreign ownership, 0% corporation tax if you are not dealing in the mainland. You can trade within the free zone and trade internationally. Audit is required, and economic substance requirement tests are there as well. In DMCC, there is now wage protection in addition. That's just come in. That requirement that is in the mainland is now in the free zones to centrally clear staff employee payments each month through the central clearing system to make sure that companies are paying their staff correctly. And the final one is mainland. I've obviously just put in Dubai and Abu Dhabi there, but there are 5 other Emirates, the Northern Emirates. But those mainland UAE, I'm talking about full range of entity types. You can have holding companies and special purpose companies, but it is a civil law jurisdiction. So it tends to be operational elements of a company's business that needs to be in the mainland is put in the mainland because the operational capacity needs to be there. 9% corporate tax, wage protection system for staff payroll, Emiratization requirement of about 150. Mainland licenses required for companies dealing with government, particularly oil and gas, government contracts, critical infrastructure, industrial, wholesale retail, anything that's physically being delivered in the UAE will require a mainland setup. There's no visa restrictions with mainland. You can have project visas, short-term visas, longer-term visas, as well as the new regime for golden visas, investor visas, etc. Companies in the mainland also need to be audited and ESR tested as well. That's coming, as well as UBO declarations and submissions each year submitted to the regulatory authority. It's not public record, but it is submitted to the authority as part of the annual compliance and license renewals. Next slide, please, Miguel. So just run through these very quickly. We've actually removed the names of the clients for obvious reasons, but just going through a few examples from Hong Kong and Singapore to give you guys an idea of where the entities and the base camp of Hong Kong or Singapore have been used in the UAE. First example is a well-known boxing brand. Franchise boxing brand of gyms that I think there are about 50 or 60 in Singapore currently. They came to the UAE about 5 years ago. They have a holdco in Singapore that owns 100% of the holding company that's based in the UAE. The UAE LLC is the activities investment in commercial enterprise, and that's 100% owned by the Singapore LLC. And then that holdco in the UAE has branches, and each branch is a gym, and that gym is franchised out to the relevant gym owners under the franchise agreements. So we helped that brand set up that holding company and all of the branches. We provided what's called an interim general manager position. So in order to get the company set up, they use us as an interim general manager just to undertake all the administration, set up bank account, get all the licenses set up, and then we pass across to the actual operational general manager, who then takes over and runs the business at that point. We still remain as administrator on the labour and immigration files, and that allows us to do the visas from the staff visas, but also the relevant approvals for the individual trainers, for the individual gyms. That's the Boxing Federation, General Authority of Youth and Sports, and there's a couple of other regulators in there. The commercial space needs to be correctly configured. The trainers need to show their qualifications, and relevant insurance needs to be in place as well. We also assisted with the municipality licensing. Obviously, the gym needs to be chosen in a place that's correctly zoned, and as I said, it needs to be correctly configured and is inspected by the DED as well as the Boxing Federation locally as well. So that gives you an idea of where an operational company from Singapore has come to the UAE to roll out that brand here. Second example, another Singaporean entity. Sorry, Miguel, go back again, will you? Shipbroker. I'll skip through these quickly because we're pushed for time a little bit, and I can make these available and have a chat with people afterwards. Another Singaporean entity. This time it was a shipbroker wanted to do the same activity in UAE. Simply Singaporean holdco. It was set up just 100% owned LLC in mainland Dubai. Went straight to mainland Dubai, operating the same activity. We helped them get set up, but also did all the VAT registration, accountancy, bookkeeping, payroll. The partners in the business, we helped them obtain investor visas, and we did all the port authority and customs brokerage approvals that were required. Third example is a rep office, a Hong Kong company, which deals in pre-development land lending, and it's a fund for mortgage-based assets in the US, real estate, and it's not actually doing the sale. It's not undertaking operational business in the UAE. It's selling those products that are based in the US through the Hong Kong entity. So it really is it's a rep office, which is a shop window. It's a sales office only. The rep office setup is fairly straightforward. The rep office can hire staff. It can't invoice and undertake operational work, but it can sell the product and act as a shop window. And it can also manage the commercial agency agreements that it has. This company has a number of commercial agency agreements with other brokerage companies in the UAE, and that rep office helped them manage those contracts in country. At some point, that company will turn itself into a full LLC to do more of the actual invoicing and work in the UAE, but right now it's sat there as a rep office. So it gives you an example of a company that wanted to come in with a lighter touch and just set up that quick and easy sales office to get a couple of people on the ground. The fourth one is quite an interesting one. This is a company that is registered with the ADNOC, so it won an oil and gas contract. This is actually in shipping, providing oil rig, tugboats, and crew, and also consultants into ADNOC secure areas, refineries, desalination plants, power stations, that kind of thing. They won the contract prior to setting up, and ADNOC said, okay, now you need to set up in the mainland of Abu Dhabi. So we set them up with an LLC, again, 100% owned by the Singaporean entity. We helped them with the feasibility of how to do that, what the costs are, and what the requirements are, subject to that tender profile that they got from ADNOC. There's a process of submitting the approvals and registering as a vendor with ADNOC, but it all needs to start by having the LLC set up in Abu Dhabi. We then help them with security passes, something called CISPA, which is Critical Infrastructure and Coastal Protection Authority. That's a pass that you need to get into any secure area. So as I said, refineries, offshore, onshore, power stations, any critical infrastructure area will need a CISPA pass. You can only issue a CISPA pass from an ADNOC registered Abu Dhabi limited liability company. We act as a local sponsor. Those companies still need an NSA, which is a national service agent. And again, we acted as an interim general manager. They have about 20 staff, but they have quite a lot of project visas. So they bring engineers in for 3 months. We help them get 100+ visas, all the registrations, and the mission visas for those project staff as well, and they roll in based on the projects. So quite an interesting one, that one for those companies looking in that sector. And the final one, crypto exchange. This is one that has VARA regulation, is based in DMCC, so it's a free zone. We help them set up and staff there. That's not where the crypto exchange is based, but they do undertake some virtual asset service provider type activities, but mainly marketing and other support services. So it's not a regulated exchange, but it was a company that wanted to come in with a footprint there first and then move into the mainland to do more, to do actual work in the UAE rather than just have it in the free zone. So they chose DMCC there, and they had a Hong Kong holdco in that. Martin, just skip through to the next slide. There is a organizational chart example here. This is where a Chinese onshore company has used a Hong Kong holdco, and then they've also used a Dubai special purpose vehicle in this case. This is for a particular project in Bangladesh. I think it's waste to energy. So they wanted to use the Hong Kong holdco and then delineate the particular project underneath a special purpose vehicle structure, with Dubai in there as the ultimate company that would go for the bid for that project. And that's why they set up this structure here. So you can see an example of how that's worked, China, Hong Kong through to the UAE, and then the project itself being delivered somewhere else. And we see this model being replicated, for other jurisdictions as well as Singapore. So that was just one example there. Next slide, please, Miguel. Thanks very much. So just the final slide really is just to talk about the general business environment and give everyone an idea of a few little areas that you need to consider, that recent changes, but also key considerations for companies looking to approach the UAE or who are already here. So 100% foreign ownership, talked about that a couple of years ago. You needed a local partner. Right now, pretty much every activity is 100% foreign owned in the mainland. Free zones have always been 100% foreign owned. So you don't need a local partner for the majority of activities. There are some activities still need a local partner, and that's mainly regulated activities, healthcare, oil and gas, manpower, recruitment, that kind of thing. Some still need an area of local, a local component, but mostly speaking, it's 100% foreign owned across the board. Labour immigration is a key point that companies need to think about. Emiratization kicks in above about 20 employees, depending on your sector, but it's largely 50-1. Each employee needs health insurance, and that's local health insurance, locally registered health insurance, and that's done as part of the visa process. There's unemployment insurance now. All employees need to sign up to that. Job designations are quite important, and companies are issued with labour quota, which gives specific job designations for you to fill those labour quotas. So you need to be quite specific with your job designations, and some job designations require degrees and qualifications to be notarized, legalized. They're tested in the country that they're obtained, and that can be quite a slow process. There's the wage protection system as well. Corporate tax was brought in June. The threshold is 375,000 dirham turnover, so most companies hit that. And if you're dealing with the mainland, you can expect to have a 9% corporate tax to be applied to your profits, and you need to submit corporate tax returns annually. There's a couple of new regulators. VARA, we talked about, Virtual Asset Authority. There's the Federal Tax Authority, covers VAT and corporate tax, which recently came in. General Gaming Regulatory Authority, something very recent. Many of you will have seen the news that they are planning on opening a couple of casinos here. They sort of set up the Gaming Regulatory Authority for that purpose. So we'll watch with interest there, and we're also assisting a couple of companies in that space. UBO registration came in a couple of years ago. All companies need to submit their UBO when they set the company up, and then any changes to UBO needs to be updated within whatever regulatory authority you're dealing with, whether it's the Free Zone Authority, whether it's mainland. That's not public information, but it is on the internal regulatory register. Listed companies, for example, now use the listed entity or the CEO of that entity, and it needs to go back where there's a trust or a foundation in there. It can be complicated to work out where the UBO is, but ultimately they need to find an individual human being, and that person is submitted, or a number of people is submitted as the UBO, and it needs to be declared and updated on a regular basis. There's a lot of new visas. Martin talked about these golden visas, property visas, retirement visas. There's something called the work remote visa, which was brought in for remote workers, digital nomads, those people that maybe are receiving an income from somewhere else, they can come and get residency in the UAE. They'll have to declare their international income, and if it's over a certain threshold, then they can gain residency, rent a house, bring their family, and live and work in Dubai, in the UAE, but be paid elsewhere. Was quite an interesting development, and a lot of people are using that for remote workers. There's now a long-term visit visa as well, so people can come and job seek and visit for longer periods. Previously it was 30 days, it's now been extended to 60, and you can extend beyond that as well for most nationalities. Economic substance requirement. This is really a tax avoidance regulation that came in to ensure that companies have adequate substance. And this is relevant particularly for banking, finance, funding, headquarters, but also relevant for companies that have a group structure. You need to ensure that you've got the right or the adequate substance to channel revenue. If you're using a Dubai company, by definition, it's a low tax jurisdiction. Adequate substance needs to be tested to make sure that that revenue is justifiable and is being conducted in country. So there's a test that's done on setup, and then, as I said, regularly each year. And VAT. So VAT is now across the board, all products and services at 5%. And there's the mandatory thresholds there. Next slide, please, Miguel. Yeah, so quickly, benefits of doing business with the UAE, 100% repatriation of funds. So there's no withholding tax, and there's no restriction on money in and out in the UAE. 100% foreign ownership, as I mentioned. Common law jurisdictions, DIFC and ADGM can be used for asset structuring, even if you have the operational company in the mainland. VAT is pretty low, it's at 5%. There are pretty much 100% freehold opportunities for property ownership across the whole UAE now. Used to be designated areas. There are still some areas that have to be locally owned, but the majority of property areas are available for foreign ownership. Bilateral double taxation treaties. There's a double taxation treaty with Singapore and with China. So that's very useful, and they have about 90, I think, across the world, the UAE. So double taxation is not a problem. A lot of bilateral investment agreement treaties with other countries. And obviously there's 0% income tax, capital gains tax, and there's no plans short or medium term. We keep hearing whispers occasionally, Saudi Arabia, for example, looking at income tax again, but that happens every couple of years and then nothing happens. I would expect nothing to happen on the income tax side, certainly not for a long period of time. So it's, the benefit of doing business in the UAE is there. Next slide, please, Miguel. Yeah, and the last slide, just to talk about the GCC area generally. The UAE is used often as a springboard into other countries. Across the GCC, we have offices in all of these jurisdictions. We can help companies set up there and help them visa their staff, and we have operational teams on the ground to help there. Saudi is obviously a big one that everyone's talking about at the moment. You can go direct into Saudi. There is a 100% foreign ownership route through MISA, through the Investment Authority in Saudi Arabia. You have to be a corporate entity that has been trading in that activity for at least 12 months. And then there's a route to undertake the same activity, limited liability company structure through MISA, set up in Saudi Arabia. Companies often use the UAE, as I said, as a springboard, and we see them still sometimes housing their managers, staff and family in the UAE, because Saudi's not as attractive a destination yet for lifestyle choice, should we say. UAE very much is the infrastructure on schools and hospitals and just general environment, entertainment, etc. is much more preferable. So we see a lot of people basing themselves here and then project managing or going into Saudi Arabia. Saudi Arabia has brought in a requirement for regional headquarters, and that's linked to government contract work. Aramco, Neom, the Red Sea and the Line, all these big projects are now requiring companies to move their regional headquarters in order to maintain these large government contracts. So that's a bit of push and pull. There's a deadline coming up in January there. So we're seeing a lot of companies having to fulfill those requirements to keep those government contracts going. So that's creating interesting dynamic between the UAE and Saudi. And the other countries, we do a lot of business still in Qatar post the World Cup. 100% foreign ownership is allowed there now. There's a couple of free zones, Qatar Financial Centre and Qatar Free Zone. You know, it's still a very interesting jurisdiction, still very much focused on gas and industrial. Oman, 100% foreign ownership, Bahrain and Kuwait also the same. So pretty much the GCC has modernized and allowed 100% foreign ownership across the board, really, you know, in varying degrees. And that's really it. I mean, I've raced through that. Apologies for the technical issues we had at the start, but I'd like to open it up to questions and answers. If anyone's got any questions that they've put in the Q&A, I'll be happy to see if we can field them.
Yeah, we don't so far have any questions. The only question that we had is if the presentation would get circulated, and yes, it absolutely will. So if anyone wants to take their conversations offline, we are happy to kind of engage with you separately about that. But if anyone does have any questions, you can either pop them in the Q&A at the top or raise your hand, and I'll happily allow you microphone to ask either James or Martin directly. So please let me know if anybody's got any questions for the team.
Must have been a very comprehensive presentation.
Yeah, we must have covered all aspects. Yeah, so thank you everybody for joining us today. Like I said, if you want to take your questions offline, the guys are available to connect with you at any time. And I will circulate the presentation at the earliest opportunity. Thank you everybody for joining us.
Thank you very much.
Thanks, guys. Great.